In today's video, we're going to discuss the three most important Yieldmax stocks in the market right now. It's make it or break it time for these Yieldmax stocks, and as these stocks go, so will the market. Yieldmax helps me earn over $500,000 per year in dividends, as you can see there below. We're also outperforming the markets right now with Yieldmax and margin. We're up 7% for the year. The rest of the indexes are flat to start the year. We're also up 16,000 today, or 1%. And as you can see above, that also blows away the indexes. That's because we have certain funds like Cornerstone, Defiance, and Roundhill, which I've been pounding the table on lately. They've all been helping me outperform the market along with my margin. So we're living financially free out of our brokerage accounts using margin, Yieldmax, Cornerstone, Defiance, and Roundhill funds. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. So our margin debt is around $520,000 now, as you saw in our past video. And this margin debt doesn't bother me because my dividends of over $500,000 will pay that back in around 1 year. I'm also not worried about my margin interest because I've negotiated it down twice. Many of my clients who bought my e-guides did the same thing. All right, so I've been seeing a few Mag 7 names in the market that have been struggling price-wise lately, and it begs the question, is it make it or break it time for these stocks? Because as you know, Microsoft, which is the first stock we have up for you today, Microsoft, it's about 10% of the NASDAQ. So here's Microsoft here, here's the NASDAQ. It is 8% of the NASDAQ, okay? So if Microsoft is around 8 to 10% of the NASDAQ, well then what happens if it breaks the 200-day moving average right here? So Microsoft, once again, it's on the 200-day moving average, and we're buying MSFO through Yieldmax to play Microsoft because MSFO has a much larger dividend than Microsoft. Microsoft is a great stock, okay? Microsoft makes you a lot of money over the past 10 years if you look at a chart of Microsoft, but what about if it's going sideways to down for a while, okay? What if it's in a digestion period? Yieldmax gives you some upside potential, so you get the dividends with Yieldmax and you get the upside. So Microsoft on the 200-day moving average is on the fence. What do we do about this? Well, we can't control Microsoft, okay? We can't control what the market's doing, all right? All we can control are our position sizes. That's something that I alluded to in the past video. So Microsoft, it's about 10% of the indexes, and I don't keep it at about 10% of my portfolio anymore because now Microsoft is 50% maintenance, okay? When MSFO was 30% maintenance, I used to own a lot more of it because Microsoft is 30% maintenance. MSFO used to be 30% maintenance. But now that it's 50% maintenance, I simply can't own too much of Microsoft. Plus, we don't want too much stock-specific exposure, okay? We always want to stay indexed, all right? So MSFO is 50% maintenance, and that's holding me back from buying more here on the 200-day moving average. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the whole key to what I do here at this channel. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of this over $1 million in purchasing power to get ahead, and then my dividends pay that back over the course of a year, as I told you at the beginning of the video. But we have to keep big cushions here so that we can avoid over 20% corrections at all times. So we can withstand over 30% correction right now and still not be close to a margin call. That's thanks to my low maintenance names that I have with funds like Cornerstone and Defiance. Cornerstone has a 20% dividend, it has 30% maintenance, and it drips that dividend down at the NAV for 29% gains every month. And on its 10-year chart at Morningstar, it moves upper left to right. But on a chart at E-Trade, you can see Cornerstone moves sideways. That's because you have to factor back in dividends, drips, and rights offerings. So with Defiance, you have to factor back in dividends and drips to get your true chart for Defiance. But for Cornerstone, you have to factor back in dividends, drips, and rights offerings to get your true chart for Cornerstone. If you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. So you never have to worry about missing the Cornerstone rights offering announcement here at our Discord, and that's how we really level up our account. It's with Cornerstone because you take the 20% dividends, the 20% premiums that it averages per year, and then you get those 29% gains every month. So that's how we level up, and then when you get the rights offering, you get to sell everything and then buy it back after the rights offering's finished at much lower prices. That's how you really level up your account with Cornerstone. All right, so just be aware once again that in order to keep that high cushion in your available withdrawal so that you can withstand over 20% corrections at all times, you need low maintenance. And Microsoft is higher maintenance, okay? Cornerstone is low maintenance, and it is the entire index. So that's why I put so much of my money in Cornerstone and Defiance. As I said in the last video, Defiance actually falls less on down days, and on up days, it can outperform on certain up days. Today, it blew away the index. QQQ was up only 0.25, and QQY was up almost 0.5%. So we're getting better performance with our index plays with Cornerstone and Defiance. And when we have our stock specific plays like Microsoft, we try to keep these positions small because they're higher maintenance and they have higher risk. All right, so all we can do is watch our position sizes for Microsoft. I don't want to put a hedge for Microsoft because Yieldmax doesn't have an inverse hedge for MSFO. I just have Microsoft. I'm managing my position size carefully because it's higher maintenance. Next up, we have Apple, okay, AAPL. So Apple was also on the 200-day moving average just a few days ago, and I alerted all of my members who follow my Fire Portfolio service to buy Apple here on the 200-day moving average. It's worked out well for us, and so Microsoft is on the 200-day moving average. Will we get the same move up like we got with Apple? Who knows? All we can do is control our position sizes once again, and we can use our inverse hedges if we have them. With Apple, we also don't have an inverse hedge that I like to use here at Yieldmax, so I just control my position size with Apple. Apple is 9% of the index, almost 10% of the NASDAQ. So Apple is also 50% maintenance. So just be aware of that. Even though it's the largest holding in the NASDAQ, it's still 50% maintenance. You can go to other brokers that have lower maintenance for Yieldmax, but they might not have that special NAV drip for Cornerstone. So please keep that in mind. All right, last but not least, we have NVIDIA. NVIDIA has been in the news a lot lately because of the DeepSeek bombshell announcement. And so NVIDIA is right here on the 200-day moving average as a result. It had a huge fall recently. Is this the end of that mini downtrend, or is this the beginning of a prolonged downtrend? Who knows? Once again, all we can do is watch our position size for NVIDIA. We buy NVIDIA, of course, instead of NVIDIA because NVIDIA gives us cash flow, which qualifies us to banks for loans. Okay, we need qualifying income to live the FIRE lifestyle here at this channel, which means financially independent, retire early. And dividends give us that pay stub to the bank. We either need pay stubs or dividends to qualify to banks for loans. So we can hedge NVIDIA with dips, and that neutralized NVIDIA's fall recently for us. So we have dips to hedge NVIDIA once again. But all we can do is watch our position size for NVIDIA, hedge it with dips, neutralize it with dips. You're still getting income with dips. And then we put the big bulk of our money once again in Cornerstone. Cornerstone blew away the indexes once again today. So the indexes were flat today, but Cornerstone was up 1.38%. As you can see above, that again blew away the indexes. This is how we're really getting our performance, okay? We put all of our money in the indexes. We can compound our gains much better. That's how we got over $16,000 worth of gains today, which doesn't even matter. It's about the percentage. We're at 1%, and as you can see above, once again, that blows away the indexes. I always keep my puts on just in case we have a crash of over 30% in a given night. So you can always withstand over 30% corrections at all times thanks to our high available withdrawal, which is linked to our low maintenance names. But then we also have our put options on just in case we have a crash overnight of over 30%. So our put options will be up thousands percent if we had a 30% crash overnight. And that would make us more money than we potentially lost thanks to those put options. If you need help hedging your portfolio like I do with put options, that's in my Volume 5 e-guide. Our sold options were also up nicely for us today, okay? Our BidX put options. We sell put options here to lower our risk, lower our margin, and increase our income in the process. We lowered our margin by approximately $100,000 by just selling puts on BidX. We also sell puts on Defiance, Yieldmax, you name it, but I also like to sell these puts to lower my volatility, lower my risk, because if you take the premiums you receive, which is about $50,000 just for clicking my mouse with BidX, we lowered our cost basis to 20 because you do 70 minus 50 is 20. So we're controlling BidX at much lower prices than everyone else is, and we're up today $475 in this lot, $500 in that lot approximately. So that's another $1,000 worth of days gains contributed to our bottom line thanks to our sold puts. If you need help selling put options to lower your risk, lower your margin, and increase your income, that's in my Volume 6 e-guide. All right, so we're outperforming all of the indexes year to date using margin, Yieldmax, Cornerstone, Defiance, and Roundhill funds. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. These names are almost 30% of the NASDAQ by themselves, and as they go, so goes the market. But stay diversified, okay? Today, my staples were up huge, healthcare was up huge, all of our other sectors that we own in the market were up huge today, so maybe tech has a little rolling correction, but the rest of the sectors of the market have a rally, and that's going to really hurt your performance if you're all Yieldmax based. So stay diversified. All right, if you like the video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.